3 years ago, I was looking at a deal. It was about a 5 million EBITDA business or so, and it had a self-insurance program. How often do you come across that in the search world? And if you did, what would you think about that from a risk standpoint?
So in the search world, it's less common. In the sponsor world, it's more common. And I would even say in the same business, it's more common today than it was 5 years ago. So the market, the insurance market, is pushing people to, quote unquote, self-insure, or at least to take on more financial risk and participate in that financial risk. And so as an insurance broker, I love it because I have an unfair advantage, right? Like I can look at this stuff in a different way than, a buyer that doesn't have my experience. I just know how to work that system better, right? So, and the same thing actually exists with people that aren't self-insured, but they have all the markings that they could or should be. Like that is a good way to potentially save money. Now, one of the things that you got to make sure that you plan for on that stuff is when you are self-insured or when you're taking on larger deductibles at the company level or whatever, you have to fund for the worst case scenario year one.